What's up guys, Joshua here. So in today's video, I'm going to walk you through step-by-step how to open up and start investing in your own dividend ETF portfolio. Now, I'm not going to do this with some fake account that I never plan on using again in the future. Instead, I'm going to use my real money from my YouTube income, and I'm going to make it a point to start investing my YouTube income into this dividend ETF portfolio. And so you guys will be able to walk with me as I go and open up my new brokerage account, deposit money into it, pick which ETFs I want to actually begin investing in, and then buying those ETFs during trading hours on the stock market. So if all that sounds good to you, go ahead and drop a like down below for the YT algo, and let's get started. Now, before we get into the actual fun part of the video of me opening up my brokerage account and buying the ETFs and all that stuff, I want to first talk about some of the pros and cons of dividend ETF investing. And I want to start with the first pro, which is that dividend investing provides you with passive income. In fact, I would probably argue and say that dividend income is the most passive form of income out there, because all you have to do is go to your broker, buy some shares of a dividend paying stock or ETF, wait around every 3 months for it to pay you, and then just collect the income without having to do any work at all. And then on top of that, some companies will even pay monthly dividends, and I actually have a video where I go over the 6 best monthly paying dividend ETFs. If you're looking for that monthly stream of passive income to either reinvest back into buying more dividend ETFs, or if you want to use that passive income from those dividends to pay bills, that's also an option as well. Pro number 2, dividends reduce your portfolio's risk and volatility. When you invest in growth stocks, right? Companies like Amazon, Tesla, Coinbase, these are all considered growth stocks. When you invest in these, your portfolio becomes increasingly risky and is a lot more prone to dramatic swings up or down. And this isn't necessarily the case when you invest in dividend stocks or ETFs. Dividend stocks, although they do grow a lot slower, have historically been known to be a lot less volatile. Additionally, during bear markets, when other investors are losing money, dividend investors are not losing money as fast because dividend stocks have a tendency to decline slower. And on top of that, dividend stocks pay dividends. And so even if the stock is declining in value, you're still receiving that dividend income, and that sort of helps to mitigate the loss a little bit. Pro number 3, dividends offer tax advantages. The IRS treats dividend income differently from other forms of income, such as the money that you make from your day job. For example, for someone whose ordinary income tax rate is in the highest brackets of 35 or 37%, their dividends are taxed at only a 20% rate. And for those individuals whose ordinary income tax rate is between 12% and 35%, their dividends are taxed at a 15% rate. And finally, those in the 10% or 12% tax brackets pay 0 taxes on qualified dividends. The last pro of dividends are the compounding returns that you'll receive by reinvesting your dividends. When a dividend paying stock or ETF pays you a dividend, and then you take that dividend and you reinvest it back into buying more shares of dividend paying stocks or ETFs, and you do this same thing over and over again for years, you'll experience what's known as compounding returns. And this right here is what will exponentially grow your portfolio and build your wealth over the years. As illustrated by this chart that you see on the screen right here, when you consistently reinvest your dividends over the long term, your portfolio will snowball at an exponential rate as the years go on. Okay, so those are some of the biggest pros of investing for dividends. Now I'm going to take a step back and I want to talk about the cons of investing for dividends. The first con is that dividend paying stocks typically do not experience massive growth. If you look at some of the largest growing stocks over the past decade, what you'll find is that almost 100% of the time, none of these stocks are dividend stocks. Instead, the stocks that grow the most are growth stocks from companies like Tesla and Amazon and Shopify. These are all companies that do not pay dividends because they prefer to take their profits and reinvest it back into the company to continue growing. On the other hand, some of the best dividend paying stocks, for example, companies like Coke, Johnson & Johnson, AT&T, these are all companies that do pay their shareholders dividends, and because of that, they're not able to reinvest much of their profits back into growing the business. Therefore, the company does not grow as much, and so the stock price does not grow as much either. And so if you really want to prioritize growth over dividends, then you really should not be investing in dividend paying stocks or ETFs because they're not going to grow as fast as a growth stock will. The second con is that dividends are never guaranteed. Just because a company pays you a dividend today does not mean it's guaranteed or even entitled to pay you a dividend tomorrow. Some companies will temporarily suspend or even can just cut out their dividend altogether if they're experiencing any type of financial strain or they're not earning enough profits to pay their shareholders dividends. A really good example of this is Disney. Disney was a company that consistently paid dividends for 40 years and had a track record of increasing its dividend. But back in 2020, during the coronavirus pandemic, Disney cut its dividend altogether. In most cases, the only reason you're investing in a dividend stock is because it obviously pays you a dividend, right? Otherwise, you wouldn't be investing in a dividend stock because they don't grow as fast as, say, a growth stock. And the final con of dividend stocks and ETFs is that they aren't really well diversified across market caps. Most companies that pay a dividend tend to be clustered into a single market cap, and that's large caps, right? These are companies that have a market capitalization of $10 billion or more. Generally speaking, a really good diversified portfolio will contain all three market caps that kind of help balance it out, right? Small, mid, and large cap stocks. This helps to reduce your risk in the stock market and can also help to reduce your portfolio's volatility, which can have a really big impact on your long-term gains. Okay, so those are all the pros and cons of dividend investing. Now I'd like to transition and start opening up my new brokerage account that I'll use to build my dividend portfolio. Now, the first step is actually going to be choosing your broker, okay? There's a ton of great brokers to go with. The one that I'm using personally for this specific account is Fidelity, but here's a few of the best brokers, in my opinion, that you can choose from. You've got Vanguard, Fidelity, Webull, and M1 Finance. Just go with the one that's going to work best for your specific needs. Generally speaking, when it comes to these brokers, the older brokers like Vanguard and Fidelity will have more investment options such as mutual funds, options, and CDs, but also tend to be extremely clunky and just outdated feeling. On the other hand, newer brokers like Webull and M1 Finance will have less investment options, but are way easier to use and have sleek, clean user interfaces. Webull also gives you the option to invest in crypto. Like I mentioned earlier though, you can't go wrong with any of these brokers. And if you're only investing in stocks and ETFs and you're not interested in messing with mutual funds or options or CDs, then any of these brokers will work. Okay, so here I am on the official Fidelity website, and to get started, all I'm gonna do is click right here where it says open an account. And you can also easily do this from your mobile device or your tablet. If you're using an Apple device, just go to the App Store and then type in Fidelity and then download the app. And if you're using an Android device, just go to the Google Play Store, type in Fidelity, and download the app. And then from the app, you would simply go to the option down at the bottom that says more, and then from there, tap on open an account. So next, it's gonna give you the option to choose the type of account that you wanna open up. Now, most of you watching are probably just gonna go with a standard brokerage account. If you're trying to open up a dividend ETF portfolio, then you're just simply gonna click on open brokerage account. It's gonna bring you to this page here, and it's gonna ask you, will this be an individual or joint account? I'm gonna click on individual, but if you plan on sharing the ownership of this account with somebody else, like a spouse or a significant other, then you would click on joint, but I'm gonna click on individual and then click on next. Then it's gonna ask you, are you already a Fidelity customer? Now, I know that I am because I have accounts that I've had with Fidelity previously, but if you're not, you would just click on no, and it's going to take a few minutes to open up an account with Fidelity. As you can see here on this page, they're just going to ask you a few basic questions about yourself. You'll have to sign a few consent forms and things like that. It takes less than 5 minutes, and each of the brokers that I recommended in this video, Fidelity, Vanguard, Webull, and M1 Finance, are going to have the same exact process, so just keep that in mind. So at the beginning of this video, I told you guys that I was going to fund my new account with the money that I've earned from YouTube, but since YouTube has not yet paid me, I'm just going to use my primary bank account to fund my new brokerage account. So it'll ask you to enter your bank account number and your routing number, and then once you do that, you'll be able to see your bank account appear right here on the drop down. There's my primary account. I'm going to click on that because that's the account that I want to use to actually transfer the money into my Fidelity account with. So the next question it's going to ask you is, where will the money be transferred to? Now, if you just open up a Fidelity account, you should only see one account on here, and that's the account that you just opened, the new brokerage account. So you'll obviously select that account and then next enter the transfer details. So I'm going to be transferring $1,000 from my primary bank account into my Fidelity account. That's the money that I'll use to actually begin investing in my dividend ETFs. And by the way, obviously, like, you don't have to go and just invest $1,000 just because that's what I'm doing. If you can only afford or only want to invest $50, then do that. That's totally fine. If you want to invest $50,000, then invest that. That's totally fine. It's up to you. Okay, so once I hit continue, I'll just have to confirm that these details are correct and then hit submit. So it says here that I'll have to wait between 1 and 2 business days for the transfer to be complete. So we'll just wait a couple of days for this to happen. In the next part of the video, the transfer will have been completed, and then we can actually begin investing in some dividend ETFs. Okay, so here we are officially in my new Fidelity account. As you can see here on the screen, that $1,000 transfer has been complete. And obviously this is the money that I have available to me right now to begin investing with. Okay, so now it's time to actually go and start picking which dividend ETFs I want to invest in. So as you can see on the screen here, this is a really great resource that you can use to sort through various ETF categories and things like that. This website is called etfdb.com. So I'm going to click right here actually where it says dividends, because we are specifically looking for dividend ETFs. So I'm going to click on that right there, and it's going to bring up this page right here, which includes this table. On this table is a list of the best dividend ETFs to invest in, ranked by total assets. Now you can go through and sort the ETFs by different factors. For example, if I click right here where it says dividends up here on the top, you can see that the information on the table changes. I can now sort through these dividend ETFs by things like the annual dividend rate, the actual dividend, or the dividend yield. So let's say, for example, that you wanted to find a dividend ETF that paid the highest dividend yield. You would simply click right here on the table where it says annual dividend yield, and it's going to sort this table by the highest dividend yield. Now, one thing that I want to talk to you guys about really quick, just to keep this in mind, is you want to be really careful with ETFs or even stocks that pay really high dividend yields. While this could be tempting, these are often referred to as dividend traps. A dividend trap is basically when you're lured into buying a dividend stock or dividend ETF because of its high dividend yield, only to later on find out that the underlying company was actually not a good company at all. So here's an example. I had somebody comment on one of my videos saying, well, what about VALE? That has a dividend yield of over 25%. And he's not wrong, because VALE actually does have a really high dividend yield, as you can see right here on the screen. The problem though is that this high dividend yield is a huge red flag. It basically just tells me that this company is not investing any of their money back into growing their business, because they're just giving it all away to investors. Additionally, this company could be paying a really high dividend yield to try and lure in unsavvy investors who don't understand that, fundamentally speaking, this is a really bad company to invest in. And so yes, while VALE does pay you a 25% dividend yield, let's take a look at the chart. And as you can see, over the past 10 years, this ETF has lost over 70% of its value, from a high of $45 in late 2010, early 2011, to now where it's currently trading at around $11. This means if you would have invested $10,000 10 years ago, your original investment would now only be worth under $3,000. And the high dividend yield would mean nothing, because you're losing more money from the stock declining in value than you're earning from the dividends. And so I'm personally only looking to invest in companies that, yes, do pay a really good dividend, but also are still growing in value over time. But generally speaking, I'm looking for a few things. I'm looking for the ETF to give me diversification, the cost to own the ETF, the 10-year average return, and then of course the dividend yield. And so let's go ahead and refresh this right here, and I'm going to focus on these dividend ETFs toward the top up here. So we've got VIG, VYM, SCHD, DGRO. All these dividend ETFs are going to give me really good consistent dividends, but also be growing in value over time. And so they're solid investments. And from all the research that I've done personally on these ETFs here, I found that SCHD meets all of my criteria, and so that's the first ETF that I'm going to invest in. You could go and buy individual dividend stocks and things like that, but I'm personally just going to start off with investing in this one ETF. Okay, so now I'd like to transition to the final part of the video where I show you exactly how to purchase your dividend ETFs. Okay, so I am on the dashboard of my Fidelity account right here, and to begin investing in ETFs, I'm just going to click up here where it says trade. So let's briefly talk about what exactly all of this means, because if you're brand new to investing and you've never used a broker before, this may be really confusing looking, but I promise you it's much easier once you just get started. So this window with all these options is called an order entry window, okay? It can also be called like a trade window, or depending on the broker that you're using, they may call it something else. So right up here at the top, this drop down, this is trade. This is an option that I've only personally seen in Fidelity. I don't think any other broker offers this, but it basically allows you to choose which type of investment you want to invest in. So you can choose stocks, ETFs, options, mutual funds, fixed income, a lot of different options to choose from. For this video, we're just simply going to click on stocks and ETFs. Next up is the account drop down. If you have multiple accounts with Fidelity and you want to make a trade or make an investment from a specific account, you would just click the drop down choose the account that you want to make the investment in. Most of you watching, including myself, will only have one account on this drop down right here. So just click on that one. Next up, it shows you how much cash you actually have available to invest. Okay, so I've got $1,000 because that was the money that I transferred from my bank into my brokerage account. This field right here that says symbol, this can also be referred to as the ticker, which is basically a 1 to 4 letter combination that is used to look up a company's stock. So for example, Tesla's ticker is TSLA. And if I type that in, you can see right here, Tesla pops up. However, since I personally want to invest in SCHD and not Tesla, then I'm going to type in SCHD, and then the information about SCHD pops up. So next up, you've got the buy or sell options. This is pretty self-explanatory. If you want to buy a stock or buy ETF, you would make sure that buy is selected. If you want to sell a stock or ETF, you would make sure that sell is selected. This right here, where it says shares or dollars, this is just two different ways that you can buy stocks or ETFs. You can either specify that you want to buy 1, 2, 3 shares of a stock, or let's say, for example, in my case, I have $1,000 in my brokerage account and I want to invest all of the $1,000, and then the broker will automatically calculate how many shares of the stock or ETF you can buy based off of $1,000. The market order and the limit order, these two options, they are important, but for us long-term traders, it's not really critical that you understand the difference between these two. And so for you, you would just click on the market order, and that's what I'm going to click on because I want my order to go through and fill as quickly as possible. So I'm just going to make sure everything checks out, and then that's it. You're just going to click right here to execute the order, and then you're done. And so now you can see that I am officially investing in SCHD, okay? Now, whenever I want to buy more shares of SCHD, I simply come back to my brokerage account, I log in, and I just go through the same process. And that's really basically it, guys. Listen, investing does not have to be this hard, complex thing that's only available to a small number of people. As you just saw for yourself, it's really easy to set this stuff up and begin investing for yourself and to start building up your wealth in your future so that you can have that long-term wealth and that legacy wealth that I know you're looking for. But anyways, guys, that's all I've got for you today. Hey, listen, if you enjoyed this video and you have not already subscribed to the channel, but you like content like this, I don't know what you're waiting for. Go ahead and subscribe to the channel. Also, drop a like down below for the YT algo. Also, if you want to see more of me in my personal life, go ahead and follow me on Instagram, guys. I'll leave a link down below in the description, also down below on the video. But until next time, you guys are absolutely amazing, and I will see you again very soon. Take care.